Good evening. This is the Elliott wave update for the S&P 500 for Sunday, July 31st, 2022. Friday's expiration fell right in line with the expectations that I had for the market on Friday due to expiration and continuing to need additional upside and to move itself up above and towards 4,130. And it got up pretty high, actually. Let's see exactly. It got up to a 4132.50, excuse me, 4144 before dropping back and closing at 4132.50. So essentially right at that 4133 area, which is where I had resistance. So that was pretty clean and gives me a little bit more intent that we likely or can still be in an ABC up. Now, again, I want to review. Basically, the minor four pattern that I was tracking is gone. It's invalidated, and therefore that count that got us down to the possibility of minor four is also gone. So in terms of our downside and major downside at this stage, I am labeling this as intermediate wave one. Excuse me, minor wave one of intermediate wave C. And that would suggest that once this minor wave two is complete, we are due for a very strong, severe, destructive slide lower. And again, I believe it kicks off, or very soon after starting to drift down, the news comes out and it kicks it lower. So I believe it will be news driven. Something will happen somewhere which will cause a complete stop in the concept of we're going up and reverse it to get out of positions. Now, there are a lot of things out there that can do that, so I'm not even going to begin to speculate. Just going to say that that could be one possibility that may happen. Otherwise, it just falls on its own weakness as reality begins to set back in. Now, having said that, under each count, even if I'm going to come in and say that this, you can see I did count down 5, I can flip those to minor degree and put an intermediate wave C right there. And that would suggest that the S&P has completed the intermediate wave C and, in turn, 1 degree higher, the primary wave A. Now, if that's the case, we're in a primary B wave. And that primary B wave actually would have a lot more upside room, but it's going to unfold primary degree. What's going to be in that? A primary degree B wave. What's going to be inside of that is our intermediate degree ABC. And now we realize that that pattern will all unfold to the upside. So the A wave would be up, the B wave would be down, the C wave would again be up. And that again would roll out over the next several months. It does exist. I called that it existed before. What I was actually, I'm not sure what that is, but let's get rid of it. What I had talked about is that I didn't particularly like the count in here. But again, going on what the market is telling us, I'm bringing it, sitting it in the alternate view. And that's where I will keep it. I still believe that it's the downside that will kick in again because of my research and my studies within everything that's happening around this. And that I don't see improvements in inflation. I don't see improvements that we're not going to head into a recession. I don't see improvements that recession could not be pretty severe. I don't see anything that tells me anything different than, gee, we're going through a repricing situation, and we're going through, at least on a technical basis, a several degree ABC. And what I would like to do, and I'll interject that right here, is I intend on putting together a podcast, an Eye of the Storm podcast, I will go over how each one of these will drive the market lower, and then we'll have strong bounces, and then another crushing decline. So again, whether we go up to here or whether we go up to here, and yes, I see that's 5,000. Whether we go up to this level or whether we only come up to this level or where it ends up, I believe that the next turn will take us down, and will take us down sharply, whether it's a primary C wave or a minor third wave within an ongoing intermediate degree C wave down. Now, ultimately, we still have our targets below. So what I want to do in this coming podcast that I'm going to put together, and hopefully I'm going to get it done tomorrow, is that it will reveal how it all fits into the degree patterns that we need to see correct, and how these drops and rallies and drops and rallies fit cleanly into what the market is attempting to do. So to not get into that mode and into the realization that you just need to follow the trend, you need to follow the count as it moves up without getting too bullish or bearish, but just playing the price action. The price action will form the waves. The price action will produce that bullish or bearish move that everybody talks about. But again, we don't need to attach anything to it other than follow the price action. Follow what the market is basically telling us, and then putting the parameters around that fit, and then seeing how that plays, but having additional thought on, well, if that breaks, well, then it could be this, but still, we're playing it in the right direction. If you're waiting for the ultimate bottom or the ultimate top, it's going to be a long time. But there are ways, and there are means, and there are lots of strategies that you can move in and out and capture this move. It's money. You're earning money, you'll make the money. Just know when to get in and get out, or how to have a strategy that helps you get in and get out, and not having to worry that you need to sit there and watch it all day. Now, back to the S&P. I still am counting this as an ABC up. There's wave A, here's wave B. This C wave is turning into quite the beauteous C wave all by itself, where it's wave 1 of C, 2 of C, 3 of C, probably a 4 of C in play right now, and then we get a 5 of C, and it's going to be tough to say how high it would get, but I would think we could start looking at, I got price support at 41.65. I've got a little bit down there at 41, I want to say 46, but we've already been to 44, 44. So I'm going to call it that was that zone right there where it got to. Above that, I got 65. Then I have 72. This is all price support, 84, and then 4,200. I think we could make a run for 4,200. Not saying that's what's going to happen, but I'm like, it's there, it's in play. Right above that resistance of 4203-ish, we have the 50 EMA at 4219. We have Fib retracement level right above all that at 4251, I'll call it. 50 to 55, let's say. And that sits there. Could it get there? Yeah, it could. Am I going to be expecting it? Not necessarily, but I'll tell you what, you'll see the breaks and it'll be worth trading. So again, it all sits in the realm of possibilities here. And in actuality, all this move has done is come back and retested the area of the fourth wave of one lesser degree. Whether this is intermediate degree or whether this is minor degree. This fourth wave could be minor 4, or it's going to be minute 4. But either way, the move itself is getting to the area of the previous fourth of one lesser degree. Important level. It could be getting ready to complete right here, 4189, 4200. So if it starts to break down, we're going to go straight down to our 4-hour chart so we can see, well, actually, I'll start here. If I start here on the daily chart, we can see we got moving averages pretty well stacked. The 200s are still above us, providing resistance. So the SEMA is at 4217, 4219. The SMA is at 4340, at 4336, I'm going to say, but actually it's marking it a little bit higher around 40. So we've got that zone. going into play, plus the fib resistance at 4250. So if we get a break and it starts to move and we get above towards 4200 and above it, this is your next zone. All right in there. And it can do it, and it would not be any great surprise. So downside, it would have to start breaking below the 8, the 4, the 8, the 50s with the 20 right in between it. And that's all the way down. That low comes in at 39, 39, 22. That's not all that far. It's a big move since we're trading at 41.17, but it's not that dangerous of a move. It can do that. But then what the expectation, if we start breaking below here, is that we will eventually break that 36.39 because it will have put a cap on this move as being complete, and we're into the next sequence down. That's where I'm going to leave it. Let's continue to trade using the market profile, which is points of control, value area high, value area low. They're very important. We have naked ones that run across our charts. We have developing that run across our chart, and they continue to describe and to show us where all these levels will be for the market to find value areas, right? When the demand shifts, and the demand is to find buyers. So we're sellers, we're looking for buyers. We're going to see the value areas drop and go lower. They'll only buy so much, then it drops. They buy so much, then it drops. But it's letting you know that the supply and demand is great on the sell side, and they're looking for buyers. Same as we're going to the upside, and we just keep moving up and keep moving up, keep moving up. It's because those buyers are looking for value, and that's where the sellers will show up and sell it to them. All right, I'm leaving it there. Next update will be on Monday, August 1st.